In this video, we're going to look at trading psychology for beginner traders. Trading psychology is a really hot topic in trading because it's very widely recognized that the traders who have the best psychology often end up getting the best results. And even a really good trader with poor psychology can end up ruining their P&L with their bad psychology. So in this video, I'm going to give you 5 beginner-friendly tips to mastering your mindset to help you master the markets. So my first tip is to focus on trading well rather than on making money. It's very difficult to do because often traders come into trading to make money. And as humans, we are naturally emotional about money. So when we focus on the money side of trading, often it can end up skewing our decision making. It's important to remember that money is a natural side effect of trading well. So if you focus on trading well, the money will follow. But if you focus on making money, you're going to end up not trading well. A really good example would be if you think about an athlete who is really focused on the prize money rather than on his performance. If he's focusing on the money, he's less likely to perform well, and as a result, he's less likely to get the prize money. However, if he's really focused on his performance, he's more likely to do well and therefore, as a result, get the prize money. I know that's easier said than done, but there's a really simple trick that you can implement to help you focus on trading well. And we're going to head over to Thinkmarkets now, and I'm going to show you what that trick is. So how I focus on trading well rather than on making money is I watch my trade play out on Thinkmarkets rather than watching the money amount on my phone. Now, what I mean by that is I often place the trade on my phone on the Thinkmarkets app, but I do my technical analysis and my fundamental analysis on my desktop on Thinkmarkets. So rather than watching the money amount go up and down on my phone and reacting to that, I will watch the trade play out on my desktop. So I do that by using the long position and short position tool. We're going to pretend that we're taking a buy position. So we're going to use the long position tool, and I'm just going to make a fake trade here for an example. So this is my fake trade that I'm using. So rather than watching the money amount going up and down, I'm actually just going to watch the trade play out. So I'm going to watch the candlesticks, I'm going to watch the price action, and I'm going to make any of my decisions based on how the trade looks on the screen rather than how I feel about the money amount. And this brings us quite nicely onto the second trading psychology tip for beginner traders, and that is to focus on risk management before you place the trade rather than focusing on profit. So it's really easy to get carried away thinking about potential profits before the trade is placed, especially when you're using your long position tool or your short position tool for a sell position, and you're looking at how much you could potentially get from that trade. But really what I want you to be doing, rather than focusing on this side of it, the green side, is to focus on the red side. So you want to be thinking about the potential loss before you place the trade. And here's how you do it. So when you place your stop loss, you want to, first of all, place it where it needs to go based on market volatility. So that's going to be different for every trade and for every market that you trade. You want to make sure that the stop loss is in the right place so that it's not getting hit on volatility, but you also don't want to be taking on any unnecessary risk. So the stop loss needs to go in the right place for that trade. Once you know where the stop loss is, you then want to think about the money amount in terms of what your maximum loss that you are prepared to take is. Once you know what that maximum loss is, you can then figure out what your lot size needs to be based on that money amount and where your stop loss is. Then the next part is you want to say goodbye to that money before you place the trade. So you want to accept that loss and accept that that is the potential cost of taking the trade before you take it. This means if you accept the loss before you place the trade, it means that you are less likely to interfere with the trade when it's open based on how you're feeling about the money amount. You also know that the stop loss is in the right place for that trade and that you made your risk management decision based on logic rather than emotion. And this brings us very nicely on to our third trading psychology tip for beginner traders, and that is lot sizes. It's a bit of a Goldilocks situation with lot sizes. You want to make sure that it's not too big or too small. If your lot size is too big, often it can cause a lot of anxiety and fear. And again, traders will interfere with their trade based on the fact that their lot size was too big for them. However, if the lot size is too small, it can also encourage overtrading. Each little loss with a small lot size doesn't seem like much in itself. They do eventually add up, and if you're not respecting the trade, and if you're placing too many trades, it can really end up adding up and eating away at your profit and loss. The fourth trading psychology tip for beginner traders is to think about colors. Often traders can find the red and the green quite triggering, and there's a cool little trick that you can do on your Thinkmarkets account to help you to overcome this. So without realizing, we may be triggered by the colors red and green, and that's because we've grown up with associations with traffic lights. It's green or it's stop, or red is danger, or green is money. So we naturally have associations with certain colors. And if you're finding that you're too triggered by the colors on the screen that come up on the default settings, you can actually change them. So if you're using your long position tool on Thinkmarkets, you can actually click into it, and you can see here, you can change the color. So you can change it to something that you find less triggering, like perhaps a pale pink. And if you go into the green, you can change it to perhaps something like a pale green. You might find that less triggering than the bright green and red. And you can do this on the candlesticks as well. If you click on the candlesticks, you can change the colors here. So you can click into that and you can change it to something that you find a little bit calmer and less likely to cause an emotional reaction from you. So the fifth tip is to listen to music while you're trading. So many traders find that listening to music really helps their performance. Now, this is a really personal choice as to what music you listen to, because I've spoken to a lot of traders who listen to music whilst they're trading, and they all listen to something different. Personally, for me, I like to listen to piano music because I find that it really calms me down. But I know traders who like to have dance playlists on while they're trading. And I know that bilateral beats is also really popular for traders. So have a think about what music you listen to calm you down in your regular life or in any other situation, and consider putting together a trading playlist for when you're trading. I hope you found this video helpful. In the next video, we're going to go into risk management for beginner traders. So if you don't want to miss that video, make sure you hit subscribe to Thinkmarkets now. And if you found this video helpful, give it a little thumbs up.